Hey, good morning, everyone. So a quick one this morning for members. I just want to share something that should help you pick out some of those things, right? So, um, where's the easiest place for me to do this? So let me try and go to a blank area on the chart, right? So I say that a relevant move, right? We have price. Do that. Don't mind my dog. Noise backing up. Um, Right. So when price does that, right? So this move here from here to here, right? This move here from here to here is a relevant move because when it happened, it broke prior structure, right? And so what we want price to then do is for price to come down to this area here, somewhere around discount, for us to then take a trade um, and find the POI first and then take a trade from there to the upside, right? That's what we're looking for, right? Um, on the opposite is also something like that. So we have price give us a bearish move, go there, and then it gave us that, something like that. So this as well is a situation where we have this as the relevant move from there to there because price broke structure. And what we want price to do then is for price to go all the way, come to this area here, find some sort of point of interest, and then we follow price to the downside. That's what we're looking for, isn't it? Right? So that's the typical rule, right? Everybody understands that, right? Um, but I just want to share something that is quite subtle. That once you start to see this, it will increase your ability to find those. Ooh, I've just made a mistake. Oh man. Yeah, I deleted all the drawings on my chart, which I didn't want to do. That wasn't what I wanted to do, but I think I've restored everything again. Right, I'm probably gonna leave switch charts so I don't delete my all my precious drawings. Let's just take this out, right? So what I just wanted to share then is there's something subtle. So when you find those relevant moves, there's something else you've got to. I talked about it before, but maybe you've not taken note of it, right? There's something else you want to be take into consideration um, when you're seeing relevant moves, right? Subtle is subtle, and sometimes if you don't look well, you won't see it happen. So what that is um, remember that liquidity is the reason why price moves. So where you have your order blocks or fair value gaps, all those things are areas of unfilled orders. Those are areas of high liquidity, right? High, swing lows, candle highs, candle lows, right? Typically areas of high liquidity. We've already covered that sort of topic. But what I want you to start looking for and finding is, let's say we get a bullish move and we get a bearish move, right? Typically, we will now have another bullish move that gives us, the relevant move. What I want you to start looking out for will be things like this. So in this situation here, you have the same sort of move, then you get a slight move up, then get a sweep of that swing, then have this now happen, right? So you get this bit here, this little bit, that little bit there is is a draw on liquidity. So takes out a low and then pushes to the upside, right? That this sort of thing is what you're looking for on a relevant move, right? So that when that relevant move then happens, what you now also want to then look for is ideally what you'll be looking for is to find some sort of POI around this area here, right? But what I also want you to do is even once you have this relevant move from here to here, now watch out what price is doing, forming internal um, structure around this area here, right? Now, what you want to also find is before that your point of interest, try and see if price has formed some, buildup of liquidity that gives you an area of high liquidity that is just below, sorry, like just above that POI in this situation. So what do I mean by that? You can see we now have this low here. We have all these lows. We have this sort of thing happening as well, trend line. Then we have the swing low here, which is below that swing low. There is high liquidity there. That is above this point of interest that you had marked out, which is also an area of high liquidity, right? And then you now want price to come into it, take out that low, draw on that liquidity, draw on this liquidity here. It now has enough momentum to move to the upside, right? That's what you're looking for. And sort of arrangement. So I'm going to use today's trade as an example, or trades as examples, to kind of explain that. And I hope you get this point. So remember that we already knew that, or if you had been following through the week, you would have seen that on the M15, for instance, right? Um, we have price giving us high highs and high lows. So even using the 1389 cross, you can see that price is bullish at this, right? So at at the beginning of the day, which you can see this box here is the Asian session, right? And so price pulls down there, and I start to look for opportunities by 8 a.m. UK time. So I'm looking at what price did before 8 a.m. and trying to see, do I have a relevant move, and do I have a sweep draw on liquidity, and do I have a point of interest around and where I might now take a trade? Those are the questions I'm asking myself constantly, right? And so let's take a look at why I entered a trade today. Let's try and delete some of this. Or I'll leave it to, let me just go straight to the trades which I took today. So I was bullish. My bias was bullish. However, when I say my bias was bullish, I also knew that price was at the top here, right, at the beginning of the day. So there's a potential that price could come down to this area here. So when I did my analysis this morning, I had marked out where price could get into. So these two areas here, there's this area down here, a fair value gap area here, imbalance here. The price could potentially, at the time I was looking at this, potentially price could have come all the way down here. But I also saw this, this area here that I didn't believe was strong enough for price to push price up. That if price touches here, it will have to come down to this area. So I was ready for either a buy or sell, but I was also bullish in my generally looking at what was happening on my midterm time frame, right? So bear that in mind. So after 8 a.m., right? So this is 7 o'clock. This move happened here. Then we had this low that led to this high that broke this structure here, right? You can see what was that? This was a move that came down, took out all the liquidity below here, right? Remember, this is that swings and candle lows. So there's liquidity there. Price came, took the liquidity, then moved up. If it respected this area here, then that means it wanted to keep going down. But because it broke all the way through, it means that this is now a relevant move to the upside, right? Now, can you see some opportunities to buy here? Yes, because this is a relevant move. There is this fair value gap here, and I could take a buy from here. But it wasn't 8 o'clock yet, so I left that position. I didn't touch it, right? And so I then followed price. Once it was 8 o'clock, followed price, right? And there are subtle things that happen in the market that you've got to look and see them happen, right? So So we now had this low here that led to a high, pulled back, respected the low. Then we started to have price go up. Now watch this. A bullish candle should have, when I have a bullish move, successive bullish candles should not take out the prior lows, right? So we should, let me zoom this again further. So in an ideal bullish move, I should not be taking out lows, right? So we had, first of all, this move here. So let's put this up. So we had this move that started from here, went all the way up here at least before it pulled back down, right? From here, went all the way up here. Now watch that candle that started that move. Where is the low of that candle? Can you see? Can you see what happened there? This is why trading view is a better system because you can zoom into this kind of levels, right? Can you see this candle here? This one, right? So this candle here. Can you see this candle? Right? This one. Do you see that it swept the low of the prior candle and the other candle too? So it swept those lows before it then pulled up. Right? And so what did we have? We had a low bullish candle, right? Then the candle, this one here, did not come to this low. It didn't take the low out, gave us a close above, which confirmed that we are about to start a bullish move, right? Because you can see prices moving. Yeah. So it closed above. Then we had the next candle, which opened here. But that candle came and pulled all the way back down here, took out this low. So liquidity sweep again. So drawing on liquidity because for whatever reason, big financial institutions or whoever, retail traders will be tracking this low when they are moving their stop losses. They're tracking this low, so there's high liquidity there. But what did price do? It drew on that liquidity, then pulled itself up, right? And then what the price then do here? This candle came here, took this low, then the very next candle created the next move up. So this again is a liquidity sweep, drawn liquidity, right? Um, then when that happened, looking at the big picture now, right? So when that then happened, so this was drawn liquidity here. See, this here was drawn liquidity. This bit here, this bit here was drawn liquidity. Then price pulled to the upside, right? And give us break of structure, break of structure, and break of structure, right? So we now have a relevant move. And that was the trade I took. So what did I do? On that move from here to here, there is this other block. There is also this fair value gap, right, from here to here. So what I did was I also used the um, sweet spot. And this was the area, this fair value gap was the area I then decided to wait for trades to take trades. But then my stop loss I placed from the beginning of the entire move, right? And that was a trade I took. Right. So now see what Price did. Price messed about it a few times there. So Price came all the way down. Can you see what Price was doing here? These things are happening every time, giving the clues. So we had this trend line. We had this trend line here, giving us lower lows, right? And lower highs as well. Then what did Price do here? Price swept that low there and then gave us a break of structure. So even if I didn't enter from here, this was another opportunity to enter following this bullish, bias that is happening now, right? Um, right. So when that happened, I was already in this trade, so it drew down a bit, but it respected this because this low is a strong low now because it swept liquidity, drew on liquidity, then moved up. So it's a strong low. This is again another sweep of liquidity, drawn liquidity that also broke structure. So it's strong. So it gave me the confidence, stay on the trade. And so just waited for it, waited for it, waited for it. Then when it got, so I had this area here. Remember that when I'm doing this, I'm also looking and saying, is it possible that price will reverse, right? And so we had this high that led to this low, which is a break of structure and is also a draw on liquidity. Can you see? right? So I had this area here, but I wasn't going to, because I already had this bullish movement here, and there's bullish bias on the higher time frame. I kept that in mind, had this here. Then when price came to this area here, what I did was I moved my stop loss from here to this area here, right? So reduced my risk. I didn't bring it to break even at this point. Um, then when price did this, right, and so it pulled all the way down, but then the next move completely took that high out. Again, it drew on liquidity. Can you see what's happening here? It's constantly doing it. In fact, the draw on liquidity was this one here, right? Look at it closely again. So the draw on liquidity was this one here. So this was the move, low that led to a high, right? And broke structures, because it broke the structures that formed this um, POI, right? Broke those structures. Then price came down into discount area, respected that low that drew on liquidity, and continued to go up. My stop loss was up there. Then I asked the question about why do you think this did not? Because it came here, touched this area, not quite get to my stop, my take profit, then wasted a lot of time here. There was a lot of time here. Testing my patience. The reason is above here. This is Asian session high. There are people who have buy orders here, people who have stop losses here. So when that happened, again, it drew on liquidity. You can see drew on liquidity, then pulled back, then just danced around. Then this price action then hit here. Boom. Right? Then the moment it hit here, what did I see? So I was still, in fact, I had to close the trade. I left it open and moved my stop to this drawn liquidity here. Move my stop loss to this area here, right? Then when this happened, you can see low that led to a high that broke structure. It came down, moved up again, came down, formed this low here, then moved up, came down, took out liquidity from here, right? In fact, no, I actually saw this, and this was drawn liquidity high. I took that trade, a very quick trade. This was just an icing on the cake, right? Took that trade again, quick trade, stop loss below that, the beginning of that relevant move, and then followed price was 3 to 1. Look at it, 3.68, 3.82 to 1. It was only a three pip stop loss. And price came, retested it, and then took off and didn't stop. Um, Probably gave about 7, 8 to 1, something like that. So I don't know if this gave any further clues. I will teach on this on Sunday probably. So please be on the call on Sunday. Let's bring all the questions, and let's take a look at giving you some of these additional clues. This is what I'm doing in 2022, guys and ladies. It is next level stuff for the results. You can see this sort of thing here is already 8 to 1. See, that was a 10 to 1, easy 10 to 1. If I held it, I didn't hold it. Okay. That's an easy 10 to 1. Right. And then price is turning now. So I'm watching this and seeing, now I'm not under pressure to take any further trades today, right? But I will look for opportunities, the best opportunities during the New York session, right? And this is getting to 11 a.m. when I don't actually take any trades anymore until New York session. So I'm just going to wait it out, and then and take it from there. I still have a portion of my Euro USD running. I didn't take a new trade on this, but I could have. Um, so price has now come into this zone that I marked out this morning, right? So I'll wait to see if it gives us a reversal confirmation. So a sweep of liquidity, relevant move, pull back into point of interest, and then we can see if we can short it, even if it's temporary. But that will be during New York session. So that trade is still on. Still have that position open. See where the 3 to 1 was. See where the 3 to 1 was from yesterday. But you can see it's still going. That last portion is still going. It's actually hit. Um, has it got 10 to 1? Yeah, it's done 10 to 1 now. Interesting stuff. Okay. All right. So please, if you have any questions for this, this is member stuff. I'm not posting this in the general area. Watch this over and over, and then if you have any further questions around it, let me know. Okay, you take care now. Cheers.